Good morning, everybody. This is the morning show, which you're watching, as you know, I'm sure, on Stock Market TV. I'm Spencer Israel. I've got JC Parets, Strazza lurking around as well. How's everyone doing? It's hump day. That's right, chat. Yes, it is. We got John Salama on the show today. Kenny Glick will be back as well. And then hard out today. Hard out at like 9:30. And then we'll see where the show takes us. All right. But it's kind of quiet on like movers land, you know? It's like not a lot going on this morning on the news front, on the headline, on the movers. There's just not a ton going on. But we have charts. So we'll share them. And if you're watching us on YouTube, do me a favor, hit the like, please and thank you. Let's go.
Good morning.
Ooh.
Man, it is getting cold in the Northeast, boy. Woo!
Finally.
You like
I like a nice crisp fall air. It has not been crisp.
Too cold. It's been so nice, dude. We've had the best freaking fall, and now all of a sudden the cold's here. It's such a bummer.
It got crisp finally, like last week, over the weekend. It was very exciting.
It was freezing. Dude, it was crazy windy yesterday. It was a bummer.
Mm-hmm. That's right.
All right. So I'm just paying attention to what the market is doing. Like, does that make me such a bad person? I feel like people like really focus a lot of their attention on what the market perhaps should be doing or what they might want it to do. I just spend all my time focusing on what the market is actually doing. Like, and then they think I'm crazy. Am I the crazy one, Spencer?
No, I think one of the things, and there are many, or there are at least two things I've learned from you over the years. One of them is I think I think we're all lazy by default, and many people will it's easier to just have someone else tell you what is going on than to go and look yourself, right? But then when that happens, things get lost in translation, and you don't know what that first person looked at. I mean, you can assume they looked at the indexes and maybe not much else, or maybe the sectors, but not much else. Maybe America, but not much else. So yeah, one of the things I learned from you is to actually it's okay. Still, in my opinion, it's okay to look at what others are saying is happening, as long as you yourself are also going and looking and seeing what is happening, right? Yeah.
I mean, it's just, like, fine. Like, all right, maybe I eat too much rice with my steak. All right, so I'm not perfect, right? So like that, I get hated on, for doing that. Fine.
I'm sure that's the reason.
But like, I get hated on for actually seeing what the market is actually doing. I mean, it's just so odd. Can we just we'll do a little state of the markets, but I just want to talk about the world's most important stock market index. I don't know if you saw, Spencer.
I did.
This stock market index, this goes back a long, long time. Most of us were not around.
It's true.
For this. This was May the 26th of 1896. Throw up slide 2 there, guys. This goes back to 1896. Holy cow. And yesterday, of all of the days since May of 1896, Spencer, of all of those days, think about how many days, so many days. None of them have closed higher than where it closed yesterday. How do we feel about that?
Yeah, that is notable. I saw that yesterday as well.
This is the world's most important stock market index. And I don't care who you are. If you think it's not, you're wrong. Well, like in a lot of cases, I'm happy to be like, oh, this is my opinion. You're entitled to, think what you want. But in this case, if you're still in the camp that the Dow is not the world's most important stock market index, you're just wrong. You're just wrong. Sorry. I'm happy to tell you sometimes when it's just an opinion. In this case, it's fact, right? It's just fact. So what bothers some people is that there's only 30 stocks. There's only 30 stocks in the S&P 500, JC. It's not diversified enough. Well, I got to tell you something. Maybe if you looked, you'd realize that the Dow Jones Industrial Average is actually a lot more diversified than the NASDAQ and the S&P 500.
In terms of like industry groups and sectors.
Oh yeah, so like diversification, right?
Right. No. Look,
right.
I think, yeah, I asked Steve the other day. I was like, was that the government shutdown bottom? I could very well see that being the case. You were saying this,
but I don't know what that means, because stocks usually do well during government shutdown.
Well, I'm talking about last week, but we were saying, I think it was in a meeting last week, maybe the week before that. The hard part about epic rallies is that they don't give you a chance, right? They don't give you. It's very, you might not get a pullback. And if you miss it, you might just miss it. And that's like sort of the hard part there. And I can see that being the case now, where we just like rip into year end, into Q1, and just keep on ripping. And everyone just looks around at the end of the year and kind of just shrugs their shoulders and think, all right, great.
One of the things that I found interesting was that in the summer, people were already telling me this is unsustainable. The valuations, this is grift and kids gambling, just a bunch of gamblers is what they were saying. Degenerates, right? And they were telling me that the market, that it was unsustainable and that it couldn't go any higher. And I remember saying right here on this show, it's like, it's weird that everybody thinks the market is too high. The Dow hasn't made an all-time high not once in 2025. It still had not even broken out. So not only was the market not parabolic and unsustainable, the world's most important index hadn't even broken out yet. It hadn't even broken out yet. And it finally broke out at the end of August. And, the rest is history, obviously. But, you got to put things into context. How could the market be parabolic? How could this just be this rip-roaring grift or whatever, and Trump and all the shit that they're making?
Because that not everything is going up. In fact, some of the things that were going up the most are now going down, right? And
hold on, one of the things I wanted to show one more time, slide 3, and then we'll go to state of the markets and we'll talk about what's going up, what's going down. There's 30 stocks in the Dow. There's around 503, whatever it is, in the S&P 500 these days. And the S&P 500 is market cap weighted. So the bigger the company, the more representation it has in the index, right? Nothing wrong with that. The Dow is price weighted. The higher the price, the more weighting it has in the index. And so when you're doing a sum of the parts analysis and you're trying to identify based on the weight of the evidence, are more of them going up or are more of them going down? In other words, to get the index right, to be on the right side of the trend, right? But fighting trends is an expensive habit. You don't want to do that. You want to be on the right side of the trend. So if you're doing a sum of the parts analysis, you got 30 stocks and 500. Which one do you want to do? It'll take you 5 minutes to go through 30 stocks. If you don't do it, are you even an investor? Are you even an investor if you're not going through all 30 stocks in the Dow Jones Industrial Average every single week? What are you even doing?
Isn't that why the average exists, so I don't have to? Yes.
No, wrong. The average is the composite, and if you trade the indexes, you're going to get what do they say? If you trade the averages, you'll get average returns.
I don't know. Average returns is better than most hedge fund managers.
It's a fine. Then give your money then just buy the S&P 500 and go do something else with your time. But if you're going to choose to actually allocate money and you're the one making the decisions, if you're not going through all 30 stocks in the Dow Jones Industrial Average every single week, I think you're fucking crazy.
Back to what I was saying. Of course, though, we know that the stocks that were going up the most, the fun ones, the ones with the beta, the ones with the juice, the Rigettis of the world, they were in massive drawdowns, right?
So what? What does Rigetti have anything to do with the stock
market? I'm saying when people complain about the market being down, the market to them is what's in their actually, this is probably true for everyone. The market is what's in our portfolio, right? So whatever we own is the market. So if you own,
first of all, so Rigetti, for example,
if you own Rigetti or you own Oklo or you own some of these stocks that are in 40-50% drawdowns, the market's down for you, right?
Right. Now, when you realize that none of these companies mean anything,
I'm not
they're
saying
like so irrelevant and tiny, right? You realize that they're irrelevant, number one. Number two, these things also went up like 10,000%, right? So keep that in mind also. So you put two things in context. Number one, these things absolutely ripped. So they're correcting. Guess what? That's what they do, right? They've done this before along the way. Go back and look. Number one. Number two, they don't matter. It's like crypto. It doesn't actually matter. It doesn't matter. It's so irrelevant, right? It doesn't matter.
It would matter to me if I owned it. I don't, but
yeah. Fine. But those are two different conversations. It's your portfolio, and then it's what the market is actually doing.
Yeah.
Right? And not just your portfolio or my portfolio or anybody's portfolio. The market doesn't give a shit what you own or what your portfolio, right? The market doesn't give a shit. I learned that one the hard way. I thought the market did actually care when I was younger. I thought the market was like, oh, let's throw JC a bone. No, as it turns out, the market does not care.
Mm-hmm.
So, shall we?
Sure. Let's do some state of the markets and let's see what's going on out there in the overnight futures.
All right, ladies and gentlemen, we have the Dow futures, which I don't know if you heard is the world's most important stock market index.
The Dow futures? Okay.
Yeah, the futures contracts on the Dow Jones Industrial Average.
I know what the Dow futures is.
Yeah. At the highest levels they've ever been in the history of Dow futures, Spencer Israel.
Well, all right.
48,000.
You just said that 5 minutes ago.
Well, some people forget, right? Some people just have that ADD. They can't help themselves. All-time highs, highest levels in the history of the Dow Jones Industrial Average, ladies and gentlemen, up 100 today. S&P 500 futures up 1/3%. That's 68.94. Pushing new all-time highs. NASDAQ 100 up 2/3%, 25,800 almost, up 150 points this morning. 30-year bond futures relatively muted at 117.5, down a little bit. Crude oil down 1.5%, back down to 60 and change. We got copper up a full percent, back above 512 even for copper as we speak. Gold up 0.5%, 41.35. Silver up almost 2% this morning, back above 50. I'm telling you, how many times did I say I was impressed with the behavior of silver? Silver continues to act well. 51.62 for silver, 51.62. With the VIX still at 17, down a little bit today, but still at 17 for the VIX. In funny money land, Bitcoin making moves, 105,000 this morning. Came off some yesterday, getting it all back today. Bitcoin 105,000 up 2,000 points. That's 2% to the upside. You got Ethereum 35.80 up almost 5% on the day. What a day for the ETH. And then Solana 160 up 4% on the day with the total crypto market cap. Mr. Spencer Israel 3.5 trillion. 3.5 trillion. How do we feel about the futures this morning?
I love me a tradable low. I love me any trade with a very obvious out where you're wrong. Bitcoin, loving it because you got a bunch of lows right here. I mean, not right here, but Bitcoin's up. When is Bitcoin up today? 2%. This right. So, Bitcoin at 105. You got a bunch of lows at like the 100 area. Great.
That's a big level. Louis been pounding the table on that 105. I'm more of a 110 guy. I want to see that 110 to really confirm that. I want to see some of these miners. Look at Cypher. I'm not in that. I sold that a couple of weeks ago. And I'm not in the IREN either, even though I've been stocking that. I like the relative strength in those names despite the selling pressure we've seen in crypto. Some of the other guys on the team, they don't like the trade. Steve doesn't like it. Sean doesn't like it. I'm not in it, but I'm looking at that because, relative strength stands out for me. Line go up means something.
Big move in Germany today. Well,
wow. Did those words just come out of your mouth?
Hey, yeah.
Gotta tell you, Spencer,
I guess it did.
It makes you so proud.
Now, ask me what's in the DAX. I have no idea. Don't ask me. I don't know.
A lot of banks and industrials.
Yeah.
Right. A lot of banks and industrials. No tech. One tech stock. SAP.
Okay.
I just want to say to the audience out there, let's give a big shout out to Spencer Israel. Big shout. I've never seen you so excited about German equities.
No, I look at the global indices.
Yeah, but I've never seen you so excited about German stocks. I just want to give you a shout out.
Excited is a strong word.
I don't know. Check the tape, guys. If you want to rewind that, I don't know. Seem pretty excited. All right, tell me what.
Does anyone know? I don't know. I'm asking you. Does anyone know what's going on there? I don't know what's the deal with Germany here. Why are we?
Oh, you didn't hear?
No,
you didn't hear what's going on in Germany.
Should I?
Dude, I know it's a lot of people don't know this, but it's a bull market, Spencer. Right?
Is that what it is?
So if you go back and you study bull markets, what you're going to find is oftentimes the prices of stocks go up during bull markets. So if you didn't know, now you know. So when you see German equities making new all-time highs, the German DAX, and I got to tell you, speaking of the German DAX, like, ball busting aside, for me, for my money, outside of the United States, what's the most important stock market in the world? I'd say Germany. How do you feel about
that? You got me thinking about Germany versus the UK, and now I want to look at that because that was the big narrative after Brexit, was that the UK just gave away the farm, and now Germany is going to be like the king of Europe.
Dude, London FTSE 350 and London FTSE 100 is literally parabolic.
Well, I'm just saying that was the narrative after, right?
No, fine. No, I'm with you.
I'm not 9 years ago.
Throw up the European financials there.
I'm looking at Germany versus UK right now.
Here, throw up the European financials. New all-time highs yesterday. So when we talk about market breadth, to me, this is part of that conversation. It's sector rotation. I can't have a real conversation about stock market breadth without thinking about sector rotation. When I think about sector rotation, I think about weakness in staples. I think about strength in technology and discretionary and small caps, and strength in something like European financials is up there in terms of bullish sector rotation. Like, it's impossible for me to argue otherwise. You know what I'm saying?
Yeah, but at the same time, like, I'm not gonna go. Like, are you gonna go and buy a European bank?
Yeah, why not? What's wrong with buying European banks? They're making all-time highs.
No, there's no juice there.
There's no juice in buying European banks?
No.
Says who?
I don't know. I'm just thinking about.
Have you seen a chart of UBS? Have you seen a chart of Deutsche Bank? Have you seen a chart of HSBC? Remember the other day you were making fun of me for showing a chart of HSBC? That's the largest component in this index. Remember? You're like, who looks at HSBC? It's only a $250 billion bank. It's the largest component of the European financials ETF, right?
All right. Well, Deutsche Bank has gone parabolic.
Throw up the FTSE. You were asking. I love that you're asking about Great Britain, United Kingdom, Germany. I mean, who is this guy? I love you, Spencer. Where has this been all these years?
The U.S. is just too boring for me.
Spencer, we could do everything together.
Yeah, right. Too much winning. I have to go overseas. Too much winning in the U.S.
Dude, look at London. People are like, oh, it's like a recession and Europe's a disaster. All these angry people that are always telling you that it's just kids gambling and everything's a grift and everything like that. They're also telling you that Europe's in a recession and everything in Europe sucks. I don't know,
JC,
man.
Those things could be true, but it doesn't matter if one go up, right?
Yep.
So maybe they are in a recession. Maybe they're not. We're not economists. We're not to say.
I want to give a shout out in the chat to Andrew Thompson. Andrew Thompson throwing out the Zervi. Nobody talks about the Zervi, right? Nobody talks about the Zervi. Do you know the Zervi, Spencer?
Is that a German bank?
It is the Zurich Insurance Company.
Okay.
Zurich, not in Germany.
All right.
Zurich, last I checked, was part of Switzerland.
I think it still is.
Still is. Shout out to Zurich. Never been to Zurich, which is a bummer. I'd like to go there. James Comblow says the stock market is not the real economy. Guess what, James? Who gives a fuck?
He's going to say good. He's going to say good. Oh, okay.
Who cares about the economy? I don't understand what the economy has anything to do with this. You see, we're trying to make money in stocks, right? So the economy may or may not be a symptom of the stock market. The stock market may or may not be a leading indicator for the economy. I have the data and I know it is, but let's pretend it's not. Who cares about the economy? Who cares about your economy? Who cares about my economy? Who cares about Europeans' economy? Germany's been in a recession for years or something like that. Stock market goes straight up. That's all that matters. We're not here to be economists. Thank the fucking holy Lord.
Yeah, it's easier if you're just a little. I mean, JC is like very ruthless person when it comes to like the charts, but we're
Ruthless
not
when it
all
comes to
as
the charts, like how? Like I believe the price
like,
of assets.
we're not all as ruthless and as like cold and calculated as you, but like it does make it easier if you can just tune out all that stuff, right? And just look at what's actually happening.
We're trying. The only way we make money around here is to sell things at higher prices than where we buy them. That's it. And sometimes not necessarily in that order. Sometimes you sell them and you buy them lower. Fine. But generally, selling things at higher prices than where we buy them. What does the economy have anything to do with any of that?
All right. Now we're getting philosophical, and I don't really want to go there.
We are selling things at higher prices than where we buy them. Facts only.
All right.
What does your economy?
I need reinforcements.
Remember, people talk about recessions. Recessions are a choice for most of the people who matter here.
I need reinforcements. Strazza, is your camera on? What's going on? I know you're here, but
not to be a hater there, James. I love you. I'm just, you get me all riled up, getting all excited. Right? Love you. Thank you for being here. And give a shout out to the chat. Chat's great. Right? Chat's awesome. Love you guys. And come at me. It's all good. If you disagree with what I have to say, it's all good. You're not going to be the first to disagree with me. Probably not the last.
I think Bob Dada may have just nailed it. The worse it gets, the better it is, which sadly might be true.
That is not true. Dude, the economy is just slow because all that data is just super old. It's like, 6 to 12 months behind the stock market. Right?
The economy is built off survey data. We don't like surveys.
Dude, it's like I saw something the other day, like half the states in the union are in recessions or some shit like that.
Yeah, that was from 2 months ago. That was a month and a half ago.
Oh, sorry. Man. I can't. Yeah. I'm trying to keep up with the economy.
Which I can never in my life remember seeing the headline about individual states being in a recession before, like, whatever.
Listen, we need the economy, because if it wasn't for the economy, then we wouldn't have economists, right? And if we don't have economists and we don't have the Economist magazine, that's great data. We need the data, keep economists employed. Steve Strazza, sir, thank you for joining us today.
I overheard some things. We could just move on.
Well, the issue, Steve, is like,
I'm not here to argue about economics.
There's not a lot on my list this morning. Okay, there's not a lot of
smiling because he agrees with everything that I just said to a T. Right?
Yeah. Yeah.
And Strazza's not one to just agree.
No, but today I'm finding myself very agreeable this morning.
Oh,
yeah.
Someone get some action this morning. Huh?
It's a family show.
Not anymore.
We have Kenny here. We have Kenny here.
All right, bring him out.
So
speaking of action,
good.
And speaking of being ruthless,
right?
Yeah.
It's been a long time coming. They ain't come for my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
I wish I had something to add. Yesterday was actually the worst day of trading. See that? Every once in a while, I gotta say something different. Yesterday was awful.
What happened?
There was just it was immense chop, and if you didn't react quicker than light speed, you probably gave back everything you were up. I had the worst 15 minutes since I don't know, 5 years ago. It was just awful. And it was funny because I have a really bad habit or a bad luck. I take my size up at the worst possible time every time. So I was very, very bullish that Rigatoni move, and I was up nice, and I gave it all back. ASTS crushed me.
Jerry all back?
That's an interesting point. That Kenny, talk about your sizing for a second. Do you keep it the same always? Clearly not, because you just said that you
I chose poorly yesterday. I face melted like
yeah. But do you have any like sizing rules? I guess
I do. It's generally price of stock, and comfort zone, and that's why I tell people it's about who you are and how comfortable you are. The trade always is the same. The risk. So if you isolate a trade where you're risking 30 cents, and you're like, all right, cool, I could buy 1,000 shares. I'm risking $300. You buy 3,000 shares, obviously you're risking $900. It's all relative. That's what I'm trying to always establish, where the risk and the reward is. But my yesterday what happened was, I'll show you on the chart, and
Dude, can we just talk about how the old stockbroker in you just came out? When you isolate a trade, that was right there, right straight for that's old school right there.
There you go.
Nice.
You ready?
Don't think I didn't catch that.
Watch this. You want to see how my ass got destroyed yesterday? I'll show you. So the one time I decided to be a little bit greedy, I paid for it. Because normally you give me a faux show, bro, VWAP break on an earnings report, I'm high-fiving everybody in cyberspace and we're cashing out. But in this case, I really like the stock, ASTS. And we got the fake out, shake out, VWAP break. I'm buying. Everything's fantastic. This thing gets over 70. Normally, I'm a seller into these moves. You buy a stock at 69.50. Next thing you know, it's at 71.50. I'm chickity chick ching cashing out. Not this time. This time that was me buying more up there. So when it rolled over, I was hoping that it would hold VWAP, and once it broke, I had to bail, and it got nasty. So within like 5 minutes, I gave back what was a nice morning and got absolutely hammered, and it was just bad choice. So bad choice, bad luck. The trade worked. The streak is still alive. I just decided, hey, this was the one because it was at a very certain price, 67.50. I thought you got through 70. I thought you're going to get 72.50. So I'm adding to it instead of cashing out like I normally do, and I got smoked. And speaking of that, it happened on the next one too, on the RGTI. So, these trades, sometimes they work, but man, look at this stock. I got the faux show, bro, VWAP break. These are my trades. You got triple faux show, bro, action, not just your favorite porn from 87. And here it is, ripping. But what am I doing? I'm buying more because it's a fucking bull market. Let's go. Nope, not for me. They both rolled over on me, and I absolutely got destroyed. I mean, it was one of the worst mornings I had. I couldn't even talk. I was just sitting there like, why? How does this keep happening to me personally? And that's what's crazy about this trade. The trade worked. It's just yesterday was the day where I chose not to take the profit and add to the winner, and they both rolled over on me. It's just bad luck, and it was just one of those moments where you just got to say, hey, bad luck, deal with it, move on, and today's a new day.
I love I love Kenny keeping it real. Keeping it real. And it goes both ways, right?
Yeah, and then you go right back to this trade. So here's Jumama. I put some fancy stuff on the chart for you so you could visualize it. So if anybody wants to know, fake out, shake out, breakout, earnings report. This is where the money's made. So here's Jumama. You guys know about this one? They sell rugs in Africa or something, or it was the African
Amazon of Africa.
Yeah, sure it is. Right, yeah.
Allegedly.
Right. Look at this wonderful trade. I'm going to get a tattoo when we go to Vegas. I'm going to get a tattoo of this on my chest because
they don't have tattoo parlors in New Jersey.
Yeah, no. When I go to Vegas, we're going to Vegas. You're coming to Vegas end of February. It's going to be a VWAP recital or revival. I'm going to go in the white suit. It's going to be great.
Let's talk about something important.
Exactly. Did you like the video?
Of course.
We need to film that again with all of us as
100%.
So let me just talk about this trade because this is the one that worked this morning. It's already mostly in the bag. So here you got a company reporting earnings. It gets hammered, right? We love the hammering because that provides the fake out and the shakeout. So the fake out and the shakeout is when it breaks a new low, then it comes right back, and then you buy the VWAP break. So fake them out, shake them out, and you're buying here at 885, and the orange line, which is already there, telling us where prior day VWAP is where we want to be sellers. So wonderful trade to start today off. You're buying this thing, right under 9, selling it around 10 and change. Done. I'm not making the same mistake I made yesterday. Sold. So that's the one trade from today so far. And I'm going back. You got CRCL.
I was going to say, give us one more. Nice. CRCL.
Yeah, so this one, loving it. Absolutely loving it. Remember,
this is that new IPO from June, guys.
Yeah.
So this one for sure. This is great because it's as soon as the IPO, you're going to get that intraday volatility for a little bit, right? That's like that post-IPO hangover, Kenny, right?
Yeah. But this one has been all over the map, just like CoreWeave. CoreWeave got smoked yesterday and really didn't give us a good buying opportunity all day. So I'll be a little bit nervous here, but I love the fact that it hasn't broke VWAP at all yet this morning. So if this is a clean break, I'm all about this. You got your little faux show bros going on down here already. It just needs to conclude and break that VWAP. But I love this chart because look how many times it's tried to break over that range. That now is VWAP. So probably looking at a $95 break, and then that's a $99 move right there. So 4 points, and that's what I'll be looking at, as well as what was the other one? It was interesting. Wait, before I go, let me give you one more. It was Circle, Onion, and Jumama. We got that one. ONON.
You call it the Onion?
Yeah, ONON.
Dude, my wife fucking loves these shoes, dude.
Right. So, okay, we missed this one. So there you go. There's always a foe and a show below the VWAP on these reports. Let me get rid of these red lines. And let me tell you something about yesterday. Sometimes when I have a day like yesterday, I'll come in to the next day and just do one and done. And now when I see this as a miss, because I wasn't paying attention, I just looked at it 20 minutes ago, and now I missed the move. This is one less thing I want to do now. So I have trades. They're very specific. They work every time. And if I miss a couple, that's less than I want to do now. So now I put my discipline hat on and say, all right, now I got to be extra disciplined because I just missed a 5-point move. So basically, look, here it is. ONON, sitting around doing nothing. The one time it tries to sell off, that's the shakeout. So fake them out, shake them out, consolidation, Andy Dufresne, VWAP break, $38. The stock just rallied to $43. And now I'm a little upset because I should have been in this trade. So if you were, congratulations. These trades continue to work. We'll be talking more about these tomorrow on the Schmooze. And it's going to be a big open house at the website. So we're going to be going with these trades repeatedly. And then we're going to highlight them all on November 22nd. And we're going to go over the it's about 911 of these trades over the last couple of months that have worked pretty well. And I'm going to try to get through as many as I can on Saturday and talk about where you're supposed to be buying, where you put your stops, what the risk reward is, and just the anatomy of this trade that's been changing lives. So hopefully I'll see you there.
Spencer, can you drop the link to the Schmooze?
Yeah, tomorrow night should be good. Maybe we'll get Strazza on as a guest. I heard him having guests on next week. Mary's coming in. We're all going to start trading together.
Nice. Yeah, I'll be there. I'll be putting on some trades. Hell yeah.
All right, cool, man. Yeah, we'll talk more about it later.
All right, Kenny Glick, ladies and gentlemen, hitthebid.com. Maybe the best URL ever. Hitthebid.com. It's such a great name. I'm kind of happy that he got a cease and desist from the NASDAQ. Like suckmynasdaq.com is like great, but like it's a little aggressive, especially in the morning. Hitthebid.com is more appropriate, I feel like. Shout out to the NASDAQ.
I've been flirting with launching a competitor to Kenny's service. It's called Lift the Offer, but it doesn't go off the tongue quite as well.
Dude, 6 months into being a dad, you're already right on point there, right? You're already right on point.
I've got Lift the Offer, but Lift the Offer doesn't. Yeah, he doesn't. It's
Before we go to John, can you throw up slides 2 and 3? Yeah. Throw up slides 2 and 3. I mean, first of all, stock market's making all-time highs. You got the bankers. Where's Strazza? Strazza, what do you think about these bankers telling everybody to sell the best stocks in the middle of a bull market? Sell the best stocks is what they say. These are the bankers over at Wells Fargo. Who knew Wells Fargo still existed? But nevertheless, they want you to sell your tech stocks. And then let's see what the journalists are telling your parents. Here, go to the next one there.
Well, they're saying to pay yourself a little. What's wrong with that?
So the bankers are telling you to sell the best stocks during a bull market. All right, that's good to know. And then the journalists are saying the stock market is headed for a fall.
No.
Bank bosses
that's what
say, and they may be wrong.
Yes, that's what the bank bosses say. Now they may be right, but they may be wrong.
Yeah, I guess we'll see. What do you think? You think they're going to be right, or you think they're going to be wrong?
It's one or the other. Can't be both.
I think that they're going to be wrong.
No, of course they're right. Of course the market's going to fall at some point, right? We just don't know when.
Throw up the XPEG, XPEV. You made fun of me last week for bringing this one up. I don't forget. I keep receipts. So this trade has already doubled for us. So if you want to throw,
I know. I got the email. I know.
So this, that's why you got to put in the work, guys. Because last week, while everybody was crying about, the market breadth is so weak and the equally weighted indexes are not keeping up. Like, remember all that whining last week? XPAV was creeping up, creeping. But you got to pay attention. Because if you're so busy whining about weak breadth and the equally weighted and you're going to miss the giant elephant walking right in front of you. You got to pay attention. So I want to give a shout out to Edward. Shout out Edward. coming in hot at the end of that meeting last week, coming in hot with the XPEV. I looked at the chart, bought it right away. I just want to give a shout out to Edward.
Shut up. All right.
Well
Nice
deserved,
trade,
Strazza,
Steve.
right?
Yeah, it's a good one. This is a good one. We like it a lot.
Yeah, I like it. I like it. Salute,
All right.
Edward.
Shall I bring on John?
Please.
Yeah. Okay. And his charts are in the deck. They are where are they? Slide 13.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
John.
Good morning, fellas. What's going on?
What's going on, my man? You know what I like about John? You know, some of you guys might not know John Salama. You know what I like about John? I like two things about you, John. You know, you come to the market.
Only two.
Yeah, only two. After that, you know, I really like that, you know, you got your eyes on a lot of things, right? You're looking at the market from a macro perspective. You're looking at all kinds of things in crypto and, you know, tech and rotation, and you're doing the whole thing. But in addition to all of that, the idea flow coming out of you, like you're looking at a lot of stocks, right? So, and all of the things that you're doing fall within the context of all of those other things, but like you're coming in hot with the trade ideas. And someone like myself, I'm always looking for ideas. I'm always looking for idea flow. You're one of those guys. You're one of those guys. So I just want to, you know, a couple things I really like about you.
Wonderful. Props. I appreciate that.
It's true, right?
Well, I think you're going to like what I'm going to say then with all these charts.
I usually do. Let's hear it.
Global bull market, man. I sent Spencer some charts last night. They're buying every global index at 52-week highs. All these charts are 1-year views. First one you put up, what? Papa Dow?
Don't fight Papa Dow. That's how I learned it, John.
I understand. Yeah. The index made all-time highs yesterday. The DIA ETF itself actually peaked. I don't know. There's a little bit of divergence here from DIA and the index. Not hugely important. It's set to do all-time highs this morning at 48,000. You get a little bit of a bearish divergence. I know it's hard to act in the moment, but it lets me know that maybe it's not as broad a rally, and you could see a short fall down 2% from 479 to 470 here short term over the week. If you do, I would hop in and get into those 30 stocks. That thing's going higher. So this is the United States 30 companies. The idea of this segment here is to give you breadth over everything that's going on in the world. So Dow, that's one of the biggest indices in the country. Of course, basically all-time highs. That's kind of all I have to have for the Dow here, unless you guys want to add something.
You know, why do you think the Dow doesn't get the love that it deserves?
Probably just because it's not cap weighted. It's not, cracked out on beta like the other indices. Like, the Qs are the GOAT for the past 30 years.
Time out. Did you just say it's not cracked out on the beta like the others? That is the line of the day right there. That's the quote of the day. You guys mark it down. Day's over. Y'all can go home now. That is the quote of the day. It's not cracked out like the other. Yeah, cracked out in beta. That's great. That's good stuff.
You think people on Robinhood buying 0DTE Dow upside calls? You can. The thing's ripping like everything else.
John, they're not buying the breakout in expediters?
Yeah, I don't think so. Jason. All right, this is Mexico. They're basically buying North America. I was almost like kind of sarcastic with these charts. You can buy every continent. They're buying all of them. So Africa. I just had the United States. I know you rave about Africa.
Dude, if Antarctica had a stock market, they would be buying that too.
I agree. I know. They'd probably be buying ICE somehow.
Yeah, ICE futures, bro.
ICE futures, exactly. This one, Mexico, again, 52-week highs. And if you zoom out, a lot of these still have overhead back from those crazy, before the great financial crisis when, there were bricks. Obviously, Mexico's not a brick, but you understand what I'm talking about in terms of commodity exposure and everything else. This chart looks great. It got really hot in the end of September, and now you just have that breakout above those previous highs. This looks strong. I mean, they're buying Mexico as well. EWW, you can buy if you get a little bit of a shortfall to 60.
You're buying Mexico, guys. Mexico, not 7 tech stocks, fucking Mexico.
Thank you.
You been to Mexico?
Yeah, beautiful.
They're buying Mexico. I mean, they're really, not known for the high quality defensive nature of their equities market, right?
No, it's Walmex and a bunch of other stuff.
Cemex,
that's right. Yeah. Last thing I want to say on this, yeah, it made me sick. You were talking about like people pissing and moaning about the RSP last week, only up 4% year to date, yada yada. That's fine. It's catching up with everything else. People are acting like the sky is falling. We're less than 2% away from all-time highs. I thought that was a joke. All right, so that's Mexico. They're buying that as well. You could buy if you get a shortfall, like I said, down to 66.5. A lot of these have bearish divergences. Brazil, I've been writing about this one. I've been trading this one.
Looks great.
Looks great. It's also commodity sensitive. You see oil, XOM perking up. I know Strazza is all about that trade and the energy finally waking up. We'll get to that maybe in a little bit, but Brazil looks absolutely great. No bearish divergence here. Overbought again. New highs. Looks great. Again, so now they're going in South
What's your
America.
favorite Brazil stock? Strazza likes the old Pabst Blue Ribbon.
Yeah, PBR is good. Vale. There's a lot. You can pick. Vale.
I like the new NU.
NU as well, yeah. EWZ moves as well. I know. Again, getting cracked out.
And then you got the you got the EWZS, which are the
thank you small caps EWZ
Brazilian small caps
as well.
You know, if you're not cracked out enough on beta.
But think about it, they're buying small cap Brazil. You're telling me this is somewhere near the end of the bull market? That's absolutely risk on, like factorial. So
I heard that a crash was coming. I got these bankers at Wells Fargo telling your parents to sell their tech stocks.
And that's why they call them the sell side. They're selling you something.
I like that. See, guys, John Salama coming in hot, just dropping those one-liners. You know, that's why it's called the sell side. They're always trying to sell you something. I like that.
Let's go around the globe. I think I got a couple more. I think it might be sectors, but I'm not sure yet. Okay, so here we're going to the SMH. Again, just calming down a little bit. To me, I still call him the quarterback of the market. I know it's a massive offensive line, kind of like my Eagles. Quiet Strazza, we are having a wonderful year again. I know he hates my birds. You got those previous highs. Remember,
really does. Not as much as he hates the Cowboys, but yeah, he hates those birds.
Oh, he just sent me an expletive privately. You see SMH here overbought going into Halloween, and then a little bit of a fallback. I am in terms of talking my book here. I'm buying ARK this week. I shorted. What else did I do here? I'm long silver. I'm just putting on my trade stock, my book. I also bought Rigetti. I was watching your hit the bid segment from before. I think you're going to get the beta really start to pick up here. Crypto and SMH, this kind of drawdown, I don't want to say concerns me. They're just letting their foot off the gas with massive winners. To me, it's profit taking, not bubble bursting behavior. And that hammer last week, or that massive hammer there that you can see was one of the best things in the market. As a technician and a chartist, that's massive. The buyer stepped in. That's your entry level around there will be rewarded.
Throw up the new slide too there, guys. John, I mean, you're talking about buying ARK, and when I think about ARK, I think about small cap technology, as kind of being like a cousin of ARK, if you will. And if you throw up that slide too, guys, I'm seeing, small cap technology closing at all-time highs last week. This is when they're telling me breadth is weakening and that there's only 7 stocks that are driving this market. I'm seeing the small cap tech index not only breaking out to new all-time highs, but making new 52-week highs relative to the S&P 500.
Yeah.
So, I mean, I just see these things, and, to your point, they don't seem risk off, like at all. Historically speaking, these are the most risk on things, right? And did you see the QQQJ? Do I have a chart of the QQQJ? So do you track the QQQJ often or no?
Not too often. That was the the smaller index.
So this is the next 100 stocks in the NASDAQ after the NASDAQ 100. Throw up the new slide too. So this is the next. So QQQ's junior, if you will, is what they were trying to do there with the QQQJ. So by definition, this index of the next 100, so in other words, 101 through 200, if you will, by definition excludes all of those stocks that we're being told are the only ones driving this market, right? These are the next 100. And then I'm seeing it closing at new all-time highs. So, when I look at something like this, and you got like 40% technology, 20% healthcare in here, another 13, 14% discretionary, this doesn't seem like weakening breadth. This doesn't seem like risk off. This seems like further breadth expansion, more and more participation. It isn't just Mexico and Africa and Japan and Germany. It's America. And it's not just 7 stocks, America. It's all America.
No, and this QQQJ has some powerhouses. This has Western Digital, recent superstar SanDisk. It has Teradyne, First Solar, and some of the the solar stuff that's come, really surged back. So absolutely, it's not 7 stocks. That's nonsense.
And then Dawson's saying that JC, nobody's talking about that anymore. They are. All of last week, I was getting, journalists and, I was watching a podcast called the All In Podcast. And it's, I think, the #1 podcast in the world right now or something like that. And so a lot of people watch this. And these guys that are not traders, I think they're venture capitalists, are telling people that there's only 7 stocks that are driving this market and none of the other stocks are doing anything. They were lying to you. None of that was true. Go back and watch that episode from last week. Literally, they're telling you that only a few stocks are going up. And these are smart guys. What's that guy? Brad Gerstner, I think his name. Yeah. Smart dude. Telling everybody that none of the other stocks are doing anything. Like, what are we doing here? That's not true. There are plenty of stocks doing well. Like, what is going on here?
I don't know what's the assignment, what's behind that motive. One of the reasons why I'm bringing you all these global charts is to show you just exactly. And the pizza pie just got so much bigger. There's more to go around. Every sector, 9 out of 11 sectors are soaring above moving average, except materials and staples. Of course, staples totally risk off. You want to stay long the cycle. This continues to go higher. And a little bit of real estate affiliation. Obviously, there's cash around the world, not just in money markets, but folks maybe, at least here in the States, are getting away from that home ownership. So they're going more into stocks. That's not ending. I know the top, 5% here in the country own like 87% of the stocks. This is going higher. I have like an 8,500 target on the S&P end of next year. And this is just
8,500 S&P 500. Just for perspective, folks, we are under 7,000. That's another 1,500 points. John Salama.
It's going to get there. It's going to get there.
And what do you think people are so angry about? Why is sentiment? Why are the bankers telling you to sell your tech stocks? Why are the journalists telling you about this upcoming debt emergency?
Honestly, probably because Nvidia is worth like 2 Canadas. The valuation probably has people freaked out, and it's just so growth. You have a company like Rigetti, stock of the year. They reported earnings 2 days ago, $7 million in sales for the quarter. Yet it's a $12 billion company. That
but when you equally weight the S&P 500, you look at all the other ones. Is it that expensive? My fundamental friends tell me it's not. Isn't there a few stocks that are super expensive and then the rest aren't?
I think folks have a little bit of the hubris about, like Musk is going to be the first trillionaire. It's going to happen. The first $1 trillion company. Now we have $3-4 trillion companies. You just don't be skeptical. You usually sound smart, but you're wrong in the end, especially when the market keeps cranking like this.
No, that's a good thing. Like being bearish and angry, like makes you sound smart at a party. But what are we trying to do here? Sound smart at a party or make money?
Make money. Jinx.
I mean, let's be serious. Okay, so that's the case on the sentiment. And then what about some of the other stuff, John? Like, how are you thinking? Okay, great. So stocks are in a bull market. Thanks, bro. Right. You made great points, but we know. What about some of the other stuff? Like, talk to me about precious metals, some of the relative strength we've seen in silver, back above 50, looks great. Talk to me about Bitcoin. Like, talk to me about some of the other stuff going on out there.
I love what you're asking. I'm long the silver December SLV D's 44.48 call spread right now.
Woo! Coming in hot long the silver bull call spread. All right, John. All right.
I'm not up on every trade, but this one's up 70%. I'm looking to get out today. It's gapping up 2%, and I'm going to take my profits out of that. The gold trade, all those things have just been consolidating a little bit. Gold did nothing for about 4 or 5 months and then cranked, right? I think Bitcoin's doing the same thing. It does concern me a little bit. I got to give shout out to Strazza. He didn't like when Strategy was making 52-week lows and looked exceptionally weak. Bitto, new 52-week low, although the way they structure that with the dividend is absolutely crazy with total return. But not a great, like you said, sentiment around crypto. But I think it's just dormant for now. I'm also setting up into an Ethereum call spread right now for December as well. I think they're setting up. I got to be careful.
What do you use as your vehicle?
ETHA for Ethereum.
So ETH because it's more liquid than ETHE.
Yeah.
Got it.
Much more liquid. The option chains are alive. And for Bitcoin, I use IBIT. I don't trust Strategy. Coinbase is a good one as well. I love that it has the lever of equity plus financials plus crypto. That's why it's one of the stars of the S&P 500. It's really got every tailwind. What was your other question about the Bitcoin?
No, I want to know about precious metals and Bitcoin. Talk to me about energy, right? So our energy stocks have really been working really, really well. Oil's kind of hasn't started moving yet, but some of these energy stocks have been big winners for us.
I will be very honest. Got stopped out yesterday on my USO short. I was in a USO put spread. I got stopped out, and I said no more. And it was like literally the same day. XOM, 6-month breakout. You've seen it break above 120. Straz, I know, was a big fan of that. You guys all are, and that looks good as well. Now every squirrel gets a nut. This is almost like an own all assets market. Hopefully not fart coin. Maybe you're a fan. A little bit too gassy for me, but this is. Get out and buy stuff. This isn't like the Sturfs and the back in the day, like own land. We don't really own land anymore. It's over the real estate problem, but you got to own assets, even if they have no earnings. I know it sounds crazy, but
love what you're doing here. Getting back to every squirrel gets a nut. Everybody gets a turn, right? What do they call it? The blue bonnie market, right? Everybody gets a turn. So, what we're thinking is that, healthcare is such an important segment of the stock market, both the S&P 500 and the Dow. This ain't Canada. In Canada, healthcare stocks are not allowed, right? It's against the rules. Here in America, right here, good old US of A, we got a lot of healthcare stocks. And so if this is a bull market and we're going to have another leg higher, which I was in the camp this summer that we would, then we reverse engineer what the future looks like. And for the market to do that, healthcare had to start participating. You needed healthcare coming in. Like, so if you reverse engineer what the next leg of a bull market looks like, healthcare's got to be a part of it. Math only, not valuations or what the fuck the companies are doing. Nobody cares about any of that. It's just math on terms of how the market works, right? Like the structure of the market mathematically. If S&Ps are going to rip, healthcare can't keep collapsing. And then sure enough, right? And then so energy, I think, has a strong potential to be the next one. We'll see.
I agree. And it's interesting. I mean, you can see the big, recovery here towards the end of October in XLV, two basically God candles that took the stock from 136 to 145 in 2 days. Obviously, we cured cancer and we're going to live to 150. And then yesterday, another massive 2% gain. You got energy need there. Pretty close, up to 52-week highs. And the AI thing is going to change a lot of these sectors, right? Like there's energy plays, Schlumberger, saying that we're integrating AI into, our pipeline, all that stuff. It's going to revolutionize all these things. So then, these companies are better than in 2000. They have earnings. It's not just pets.com, alarm.com, all that junk, right? These companies at least have prospects, guidance, so on and so forth for some cases. AI is going to change a lot of these businesses to the upside. Margins will expand. Stocks follow profits. It's going higher. If unemployment goes to 10%, that's a different problem that the market will have to grapple with. That could maybe change my 8,500 estimate for the end of next year if, you do need people to spend money on cruises. But for right now, I don't think that's a concern, considering what we just said. Fractally, the top 5% of the market, spend more than the bottom 60% and own 85% of stocks.
The PE in the S&P 500, hello, John, was almost 3 times back in 2000 what it is today. The price to earnings multiple in the NASDAQ 100 was 100x at one point. It's 27 times today.
Just to be clear, in terms of Canadian healthcare,
no, I'm not talking about.
I mean, no. In the chat, there's like 8.
And that's me.
There's like 8 stocks, and they're like medical devices and a few biotechs. I'm rooting for them, but they don't actually matter in Canada. Not allowed. Against the rules, over the line.
David Cox was on yesterday, guys. He made a great point. He said, if you go look at the S&P TSX capped indexes, like their version of the sector spiders, basically, he's like, our healthcare is better, our industrials are better, our energy is better. He's like, consistently cycle in and cycle out. So that's really interesting. Yeah.
Dude, David Cox is the man. David Cox is the reason I look at quarterly charts.
David Cox is inspiring me to reduce the period on our RSI. I've been playing around with that.
He's one of those.
Yeah.
Dude, go down that Connie Brown rabbit hole.
Dude, her books are tough for me.
I know they're tough. You and I aren't smart enough for her books.
I gotta be honest. I'm not smart enough for Connie.
I'm not smart enough for her books.
A lot of math.
We should have her on. Why don't we have Connie Brown on? So instead of pretending that we're smart enough to read her books, we can just have her tell us.
Just ask her about it.
Just ask her. She's lovely. Yeah. She's so nice. She's super sweet.
So not even going to pretend like we read them. Just
dude, have you seen her latest book? Her latest book is like 1,500 pages. It's like this one of these you need like one of those scrolling machines just to be able to hold the goddamn book. It's like,
she'll probably understand.
Dude, I'm not even kidding. It costs like thousands of dollars to buy the book.
Yeah, it's not for me.
Bartoloni has one.
Definitely. All right, John. So are you still super long gold and gold miners?
Silver right now. I got out of the GDX. I'm an SLV. I just love the momentum on 3 and 6 months. I'm getting out, like I said, I'm getting out today probably.
It's been a killer trade, my friend. Good for you.
Yep, I'm sure.
All right,
put spreads.
final trades. Final trades.
Yep.
John, what's the trade right here, right now? What are you buying? I got money to put to work.
I am probably buying ARC today, and what else do I have here on my sheet? Probably, I'm going to get into ARC today. That's probably the one I'm really focusing on.
Wow.
Maybe get long.
What do you think about that,
energy.
Strazza? Speculative growth. Are we back?
No protective puts for John Salama.
Sometimes, but
No, okay.
Not this time.
Not this time.
Sometimes, not this time. No, you got a little VWAP level there in the ARC from the August lows.
Strazza, what are you putting on?
I'm chilling, dude. I'm watching what's going on in healthcare. Wanted Pfizer bad yesterday. Got some, not as much as I would have liked.
Dude, that Madrigal, bro.
I want the big boys. I want to go to the big boys, hit them in the options market, and play some of these pops because like the largest healthcare names are just zooming, and you have plenty of liquidity there. You could easily add leverage. Look at the candles and like just Merck and Pfizer yesterday. Medtronic.
Are we pretending that healthcare is a defensive sector, or are we past that?
No, it always is.
Is it?
But it's fine, you know.
All right.
Like
Everybody
Johnson
gets a turn, baby.
So.
Everybody gets a turn.
Everyone gets a nut.
You call this a Bonnie Blue market because everybody gets a turn. I heard that right.
Yeah, you like that?
He did say that.
Wow.
Be careful.
I said that. Yeah. Wow.
All right.
Yeah, good.
All right, ladies, gentlemen, this has been another episode of the morning show. We are incredibly grateful to have friends like John Salama. John, you are the man. The chat's loving it. They want you here more often, so don't be a stranger. Spencer, stop messing around. Get John here more often.
I like John Salama so much that when I go to the deli now, I say, give me some boar's head Genoa Salama. And they say, sir, you mean salami? And I say, no, I don't. I mean Salama.
Love it.
Mm-hmm.
They'll get it. They'll stop correcting you.
All right.
Also love uranium. I got in yesterday. It's rocketing here.
Uranium, not Uranus. Uranium.
No, uranium.
All right.
URA. Down, Spencer. Jesus.
All right, let's get out of here. Thank you for watching. Big day on the channel. Check out all the shows, stockmarkettv.com, YouTube, Twitter, the whole thing. 11 o'clock, 12 o'clock, 1 o'clock, 5 o'clock. A lot going on today. Sean, Kenny, Jeff, Riley. Thank you, John. Thank you, chat. Go make some money, all right?
Later.
I'm going to be MIA for the next hour.
Run it.